India has a problem. So, by law, schools in India are not allowed to make profits. They must operate as non profits under a trust, society, or Section 8 company as mandated by the Right to Education Act. Now, in theory, this means something very simple. Every rupee you pay as school fees is supposed to go back into education for teachers' salaries, classrooms, labs, and facilities. So let me ask you a basic question. If schools are actually non-profit, then why are school promoters living in 30 to 60 crore houses? Why are private equity firms like KKR, Blackstone, Lighthouse, and Kaizen investing hundreds of crores into school chains? And why do school fees increase 10 to 20% every year, irrespective of inflation? In 2023 alone, private equity investments into Indian schools crossed 500 million. And that money is not going into classrooms. It is going into the machinery around schools. And to understand this, you need to understand the structure of schools. Almost every large private school operates with three layers. Layer 1 is the school trust or society. Now, this is the legal school entity and it collects fees and shows almost zero profit. Layer 2 is the for-profit management company. Now, the company provides branding, administration, curriculum, IT systems and all of that. Now, this is where private equity invests. And layer 3 is a network of vendor companies such as uniforms, transport, canteen, infrastructure, books, and software. And most of these vendors are owned directly or indirectly by the same promoters. So the school remains legally non-profit, but the money quietly flows out. Now let's put some numbers to this because without numbers, we have nothing. Let's start with uniforms. Now, most schools force parents to buy uniforms only from approved vendors. Now, parents obviously have no choice. The actual manufacturing cost of a full uniform set is anywhere between 800 to 1000 rupees. But parents are charged anywhere between 3500 to 4500 rupees. Assume 2000 students with a cost of 1000 and a selling price of 4000, that's 3000 rupees profit per child. With 2000 students, that's 60 lakh rupees per year, and this repeats every single year. Now coming to books and stationery, school prescribe very specific editions and bundles. And often, the same books are cheaper outside. Investigations show markup of almost 150 to 300%. Now, an average spend per student is 10,000 rupees a year, where the actual cost is only 6,000. And the profit per student is 4,000 rupees. So that means for 2,000 students, they make 80 lakh rupees a year. If you think this was big, wait for transport, because this is the biggest cash machine. Now, an average school bus fees range from 30,000 to 50,000 rupees per year. But the actual cost, including fuel and driver, is basically around 15 to 20,000 rupees. So the bus fee is usually 40,000 rupees. The cost is around 20,000 rupees and the profit per student is usually around 20,000 rupees. Now assume only 75% of the students use buses, rest come by private transport, that we will take around 1500 students, and that into 20,000 rupees of profit is basically 3 crore rupees per year. Now, Right to Information Act replies in Maharashtra shows 78% of school transport firms are owned by trustees and relatives. Now coming to another expense known as the canteen expense. Here, an annual spend per student is roughly around 18,000 to 36,000 rupees. And food businesses in canteens usually operate at a margin of 35 to 40%. That means here, we will look at a profit of 12,000 rupees per student and assume only 50% of the students use canteen. That is 12,000 into 1,000 students, which is again a 1.2 crore per year business. Now, as you can see, all of this is massive cash flow generating machines for a non-profit organization. Now coming to your infrastructure and development, schools are allowed to spend all their surplus on development. But who decides what development costs? So RTI investigations found projects built at 10 to 12 crore that usually cost only 4 to 5 crore. So the actual cost of development process for a particular school would be 5 crores, but the build cost or with extensions would cost around 12 crores. And the difference is shown as development, which is around 7 crores. So on paper, the non-profit organization makes zero profit. Now coming to consultancy charges and management fees. RTI audits in Delhi found inflated admin costs and also in some cases found ghost employees. That means the management fees was shown approximately at 3 crores, consultancy was 1.5 crores, and admin services, cleaning and all of that was around 2.5 crores, which was again another 7 crores per year business. Now add all of this up for one mid-sized school, which is 60 lakhs for uniforms, 80 lakhs for books, 3 crores for transport, 1.2 crores for canteen, 7 crores on a management fee, and approximately infrastructure cost annualized at 2 to 3 crores. The total extraction for a mid-sized school would be 14 to 16 crores per year that goes out of the school. And in all of this, the school will still show zero profit as a non-profit organization. And that is why now you understand why private equity firms are coming into this picture. Now here is a simple, beautiful example. So schools in India, both non-profit and for-profit, are good money-making opportunities. One such example is a PE firm called KKR, who invested 1,500 crores in a company called EuroKids just 5 years ago. The PE titan is setting its sights today on a 5x jump in valuation for the entire school's chain, riding on corporate direction and revenue boost from fee hikes. Basically, they are now planning to sell this chain for $1.2 billion, and the top line of this school, which is the revenue, is around 1,000 crore rupees. Now let's zoom out. India has 3.5 lakh private unaided schools and 15 crore private school students. Even if average annual fee is just 50,000, the total market size of this is 7.5 lakh crore. If only 20% is extracted, that is 1.5 lakh crore every single year. India's entire education budget is only 1.2 lakh crore. So parents pay more than what the government spends. And teachers, an average private school teacher would earn anywhere between 25,000 to 40,000 rupees per month. And fees rise every year, but teachers' salaries do not rise every single year. So private equity, by the way, did not create this system. They simply used it, optimized it, and took their benefit from it. And as long as parents keep paying, this machine will keep on running. So I hope you guys enjoyed this beautiful video. And if you found this helpful, please put your comments in the comment section below. And please do not forget to follow this channel as well. That would help us a lot. Thank you. Take care. See you. Good night. Bye-bye.